Hi, traders. Dale Pinkert here at TradeGateHub.com, sponsored by TradeView, and we are fortunate to have Helene Meisler with us today. Helene writes a column, has a column at Street.com, and Helene's one of Mike Venezia's favorite Twitter follows. Mike posts Helene's stuff. If you're here in our little trading room here, you're going to see Helene's work every day. Mike posts your stuff. You are on his curated Twitter list, and he's an excellent trader, and your work helps him quite a bit, and everyone that sees it. Helene, thanks for being with us.
Well, thanks for having me. And
And
he's a big horse racing fan.
yeah, he owns horses. So yeah, Mike, his father was a famous jockey, so it's in its DNA.
Oh, I
And
didn't know that.
yeah, so you learn about the horses. The markets were a natural evolution for Mike. He can handicap stocks the way he handicaps horses. So I want to talk about what's top of mind here. We're getting some risk-off moves here. So let's talk about this overbought, oversold oscillator and what it's telling you. What's the market message here?
Okay, well, this is my intermediate term overbought, oversold oscillator as opposed to just the shorter term one. The shorter term one is also overbought. But I have been saying for a month now, I guess, that I didn't think we'd get intermediate term overbought until somewhere close to Thanksgiving.
Okay.
That's because I need this oscillator to head up, if you will, to closer to the top of the page. You can see the zero line here. And, right, getting it up here makes it overbought. You can see that it got overbought here in August and actually hung up here for a while before it kind of crapped out.
Capitulated, yeah.
Well, before it mattered, really.
Yeah.
You can stay overbought for a while, but eventually you succumb. Right. And according to my notes, we will be overbought somewhere around Thanksgiving on an intermediate term basis. And so that means that until that point in time, I think that the market has an opportunity to rally. I've been saying that since late September, and I'll say it now, for the next couple of days. But if I start to get negative divergences and I start to see negative signs in the market, especially as we get close to that overbought, I'm not going to be quite so bullish anymore, which is kind of where I find myself now in that transition phase, going from, I think dips get bought to now perhaps rallies are going to get sold.
Okay, Helene, have you ever heard that expression that the bears feast on Thanksgiving and the bulls do on Christmas?
I have not.
Okay, well, it's a Wall Street adage, and we're heading into some important news after Thanksgiving. The PCE deflator is going to be out. Then a few days after that, it sets it up for the Fed. Could that be what we're getting right now? Is a little bit of profit taking and people taking profits? It's been a pretty good run from 3,600 to 4,000. That we're just going to correct that advance into the Fed, and then December we get your readings later in the month up towards that 300-400 level down the road.
Dale, I would say that anything is possible.
Yeah.
But I don't write narratives. I leave the narratives to everyone else.
Okay. And, thank you. Gives me a niche.
I'd rather just focus on the indicators, and somehow or another, the news happens to fit the story. Okay. And so that's where we are right now. And I can just tell you that in general, let me take you to the next slide here.
I'm just saying your slide, and I do believe that you could get those readings. That it implies to me that I should be looking to buy this break in the S&Ps over the next 4 or 5 days.
Well, no, I'm guessing I'm on the other side of that. I'm thinking that if we do get a rally in here, as we get closer to December, I'm a seller.
Okay. All right.
And I'll show you some reasons. First of all, let's take a look at the number of stocks making new highs on the New York Stock Exchange. NASDAQ doesn't look any different.
Okay.
Just take a look at when they peaked, early November. So
Yeah.
you had a nice rally, and you kind of chopped around and came back a little bit in early November, and then we had that CPI/PPI rally that took us up to
Right.
4,000. But what's happened is that the rally has been strictly index weighted, because you can see that the number of stocks making new highs, in other words, you were making a lot of money in individual stocks. And
Right.
now not so much. It's getting a lot harder. The stocks that were doing well in October have backed off, because if they didn't back off, they'd still be making new highs.
They had no sponsorship.
Yeah, some people would say that that's great group rotation. I say it isn't for a trend. For a trend, you want continual up moves. So
That's a pearl.
to take your bullish vantage point here.
Well, short term, go ahead.
I would need more than 100 stocks making new highs if the S&P were to rally again. I don't know. You need to double the new highs, and you haven't done it so far.
Okay. All right. So that's understood. Short term actually will turn negative this week after getting blown out by my shorts on the PCE number last week. That I think that we could pull back maybe even towards 3650, but I think 3600 is safe for now. But let's go ahead to your next slide here. The put call ratio, something that Mike posts at all the time when you show it.
Okay, I want to take 2 seconds here, because this morning I posted this chart on Twitter, and it's the equity put call ratio from yesterday, which was 1.46, which is off the charts, the highest we've ever had. I could rationalize from here till next Tuesday why it doesn't matter. The deal is there were a heck of a lot more puts than calls being bought yesterday on equities. Okay.
Okay. Individual issues, not the indexes.
Individual issues. Okay.
Okay.
Does it matter? It should matter, because eventually all puts or all calls that are that extreme get unwound. Okay. You can see that you had that during COVID. It's a little harder to see, but you can see that just prior to the CPI last week, you had a reading at 130. And how did it get unwound? It got unwound last Thursday and Friday, right?
Right.
With the CPI. So eventually that should get unwound. So to give you your bullish scenario, if you will, you can get one more pop in here, between now and December, because that probably has to get unwound. Now,
okay.
Let me go back to this. Let me go back to the 30-day moving average of the put call ratio. And this is the total put call ratio. Now, remember, the equities will be included in that number, okay? But it smooths it out a bit more. It's not nearly as wild. But yesterday's reading was 1.25. Obviously, a lot of that was influenced by the equity put call ratio. Forget that for a second. Take a look, and a higher reading on a moving average is going to send the moving average line up, right?
Yes.
And so take a look. Here's your early April high in the S&P.
Okay.
Here's your May, June low.
Right.
Here's your August high. Here's your September, October low. And we're just starting to turn up again. Okay. So, I can make a big deal out of that one-day reading. But here's the reality, is that the trend, if it turns up from here, I mean, you only have one little uptick, but if it turns into something like this or something like this, it's going to matter.
Great point. So, and they are higher lows.
Yeah, I don't.
That doesn't mean much,
because this was a lower high than that, and I don't know that really matters.
Okay. All right. So
it's just maybe not as extreme.
The important point is to have a telescope and not just a microscope looking at one day.
Right.
Okay.
Exactly. You want to pull back and see. I like to use it as a moving average because it gives you more of a picture of the trend than, one day of excitement.
Okay. Great look.
And I'll give you this one. The Investors Intelligence Bulls, different than the AAII, big deal, ticked up this week to 38% bulls. Not that high, but it
Yeah.
is the highest since the August highs, which were 45.
Okay.
Okay. And so, to me, everyone can scream everybody's bearish, but this tells me they're not. They're well on their way. They were bearish at the lows. You were at 25%.
Right.
You're not down there anymore.
It's neutral now.
You've converted an awful lot of people.
Yeah.
Right?
Great point.
All right. The conversion is there, or at least it was as of a few days ago.
I like that conversion. All right.
And if you take a look, everybody loves to use the AAII bulls
Right.
and bears. I'm not quite as keen on them. I think they're fine if you have something else that confirms them. And in this particular case, this morning, we chimed in at a little over 33% bulls. That doesn't sound like very much, but believe it or not, it is absolutely the highest tick of the year by 0.2.
That's something.
It's only by 0.2, but it is the highest tick of the year. And again, when you started out down here in the teens, and now you're at 33 and you're at the highest tick of the year, that matters because again, I'm stepping back and I'm looking at the trend and people have been converted.
Yeah.
And so if and even if I take a look at the bears were up at 60%, right? And now they're down at, I don't know, 40%. So
and you know what, Helene, converts are always more passionate and more aggressive about their new belief than people that have been in that camp for a long time. So, that's interesting.
It's also, I often say that bulls and bears are like next door neighbors with a fence between them. Okay. And in late September, the bears were sitting in their backyard on the lounge chairs, drinking pina coladas, having a great time. Okay. And the bulls were like afraid to come outside into the backyard. And now what you've got is the bears have kind of scurried away, or they've moved over to the fence and they're peering over what's going on over there on the bull side. And
well, winter's coming.
Over, and the bulls are
winter's coming. It's time for bears to hibernate.
So
right,
everyone thinks it's oh god, they're all bullish. They're all, but who cares? Just it is like an oscillator. They go back and forth.
Yeah. Okay.
And so
another good perspective there.
So now I just want to say what's different.
Yeah, that's
between now and August. Okay, we'll start with the yield on the 10-year. Just take a look at where we were in August on the yield versus where we are now. Just this night and day, okay? And we had been heading so much lower into that August high, which is not the case now. And stocks, which I don't have a chart of the S&P, but the S&P kept rallying almost until mid-August. Certainly NASDAQ did.
Yes.
And yields just kept ratcheting higher. Okay, what we've had now is yields have come down quite a bit. I think they're due for a bounce because you can see that green line there.
Concur.
But I think the chart looks vastly different now in terms of where rates are. Even if they go up, they've had quite a fall here.
So we could rally back to 4% and then fail again.
Exactly. So I think bonds are in a different place. I also think the dollar is in a different place.
You showed a chart right before the dollar broke trend. I saw it on Twitter. You were featuring it.
I have been talking about the dollar for ages. Let me also point out that the dollar peaked when stocks made their lows. I know everyone wants to talk about October 13th as the low. The low is in late September. Sorry. Newsflash. Here's your late September peak in the dollar.
Yeah.
Here's your October peak. Here's your October low. The dollar didn't care. There was your first divergence. Okay.
Right.
And then obviously you made another lower high.
Yeah.
Earlier this month, and now you've come down. But you've come down to this blue line, and this blue line is really quite good support, and you should come back up into this range here now of 108, 110 on the dollar index. So again, if I take a look at August, okay, the dollar was still looking more like a correction than a top.
Exactly. So it wasn't a trend change. Now we have it. So you're talking about two things that were headwinds for the market for quite some time that now are tailwinds,
Well,
although they're both going to correct.
I would say they were tailwinds in October and early November. Now they may just be neutral.
Okay. Yeah, because
you've
go
had
ahead.
a huge move in both the dollar and the bonds now.
Right.
So to continue to expect the dollar to collapse and bonds to keep rallying feels like, you know, you're getting ahead of your skis.
All right, so maybe we get the rally in yields to 4% and the dollar rallies back between 108 and 110, and that's a time to be looking back at the long side of S&Ps. How's that?
It could be, but you know, for me, I'd need my oscillator to be oversold. I'd need sentiment to get more negative. I'd need the number of stocks making new lows to contract, not expand. I mean, I've got a lot of other things I need going on, but these are all sort of in the same picture.
So follow Helene at H Meisler so that when this happens, she lets people know, and read her stuff on thestreet.com, or you're not going to know when her shorter term stuff lines up with what we're talking about.
Pretty much.
Go ahead. Go ahead, Melissa. Go ahead.
Pretty much.
Yeah. So, okay. Is this pretty much it? I mean, those are big themes. The dollar and yields are huge themes, and they have shifted trends. So really appreciate what you do. You're one of the best technicians out there. And what I like about it is I believe that there's power in simplicity. And you could look at people's charts that are so busy and you can't figure out what they're trying to say. Yours are really straightforward, Helene.
Yeah,
Really.
I do. I admit I have trouble when someone sends me a chart with so many lines on it and I get confused. So maybe that's why I keep it simple, because I get confused so easily.
There's power in simplicity. And anything you wanted to continue with or wrap with?
No, that's pretty much where I'm at. So, you know what, like I said, I think in the short term we can rally. Just because, you know, we're not maybe fully overbought yet, but I'm not convinced that everybody else is, that seasonality is this wonderful drug that's going to take us significantly higher through September.
Yeah, and you know, Santa can't,
not September, December.
Yeah,
sorry.
and Santa can't find any, there's no coal around. So I wish I would have been much more naughty this year, because I wasn't going to get any coal in my stocking anyway. So, you know, I want to wish you and your family a great holiday season, Helene. And thank you for what you do in the financial community of giving some straight talk to people that are sometimes technical analysts, if you know what I mean. So I mean, I really appreciate your work.
Well, thanks so much, and thanks for having me on. Happy Thanksgiving and to you and your family.
All right, everyone. Helene Meisler, follow her at H Meisler and read her great stuff on thestreet.com. Thank you so much, Helene.
All right, thanks. Bye.
All right, my trading warrior sister, Helene Meisler.